BYD just wiped out about $45 billion in market value. Investors are asking a hard question. Is China's EV boom cooling, or is this just a reset? Here's the quick download. BYD's Hong Kong shares have dropped more than 30% from their peak 4 months ago. Analyst sell ratings are at the highest since 2022, as patience wears thin with BYD's deep discount strategy. The company cut its 2025 delivery target to 4.6 million from 5.5 million. Q2 profit fell 30%. That's the first decline in over 3 years. The price war in China, it hits margins. In August, BYD's sales fell 20.7%. Geely surged 83.6% to roughly 173,000 units. Leapmotor is gaining ground. BYD still leads with 27.8% NEV market share, but that's down from 37% a year ago. Beijing is calling out involution, basically endless discounts cannibalizing the industry. Authorities warn it's deflationary and bad optics abroad. Product-wise, even BYD can't sprint forever. Some lineups feel stale after years of dominance. Major launches are pushed to early 2026 to come back stronger. Overseas, with more localized production, exports could hit 900,000 to 1 million units next year, above earlier guidance. So what does it all mean? Short term, more pressure on margins, choppy sentiment, and probably tighter pricing discipline across China's EV field. Medium term, if BYD truly pivots from efficient manufacturer to recognized tech leader, batteries, software, power electronics, investors could re-rate the stock even if earnings wobble near term. Long term, China's EV share gains abroad continue, but the domestic market needs healthier competition, not a race to zero. What I'm watching, pricing stabilization signals. The 2026 product slate timeline, overseas volumes quarter by quarter, any policy moves to curb the discount spiral. BYD's still the leader, but now it has to prove it's not just big, it's better. If you found this useful, drop a comment with your take on the price war and where you think BYD goes from here. The Chinese EV market is at a crossroads between growth and sustainability. Innovation cycles are accelerating across all major players. Chinese consumers are becoming more sophisticated in their EV choices. Supply chain resilience will determine long-term winners. Infrastructure development continues to support market expansion. Government policy will shape industry consolidation patterns. What happens in China's EV market affects global automotive dynamics. Capital allocation will favor companies with clear technological advantages. The next 18 months will reshape competitive positioning across the sector. Mass market adoption depends on value proposition beyond just price. Software, batteries, and manufacturing excellence must converge. Industry maturation will reward sustainable business models over pure growth. Market sentiment will stabilize as fundamentals become clearer. The companies that balance innovation, profitability, and scale will emerge stronger.
The EV revolution continues, but the rules are changing. What's your prediction for how this shakes out? Let me know in the comments and subscribe for more deep dives into the markets that matter.